Hi everyone, my name is Rishit. Today is the 15th of April 2023 and I'm going to be giving my weekly prediction for SPY as well as going over my prediction for last week for SPY and the trade that was triggered based off of my prediction and going over profit and loss that was made based off of this decision. But before going into the video, it's important to make the disclaimer that all information presented in this video is completely for educational purposes, and it is unadvised to take a trade based solely off of the information presented in this video, since markets are subject to risk and taking uninformed positions can result in hefty losses, and it is advised to consult a financial advisor before doing so. Now that we've gotten this disclaimer out of the way, let's get into the video. As usual, we'll be going over the monthly, weekly, and finally the daily charts, and from now on I'll also be going over my Excel data which I introduced from last time, going over predictions from last week, and explaining my prediction and levels for this week's SPY prediction. So, as we can see from the monthly charts, we have a clear sideways trend with an immediate support resistance of 418.18 and 375.10. Now, 418.18 is a very significant resistance line that has been active for the last 7 or 8 months. As you can see, spot price currently is 412.46. So this resistance level is very, very important now, especially with the prediction that I'm going to make, because it's the resistance that has been keeping the past few months in check. And if this resistance is crossed, then obviously it has a very, very bullish implication. However, it is very likely that the market can reverse when the market goes up to this price. And that's all that we can gain from the for resistance and support. We can also see that the month of March was a clear hammer, which means that this month is expected to be bullish, since a hammer is a very, very bullish candlestick pattern. Also, let's move into the weekly charts now, because this is all that we can decipher from the monthly. And here's where things get a bit more interesting, because as you can see, we have a 3 white soldiers pattern, which is a very, very bullish reversal pattern. Next, we had this doji candle, which was last week. And as you can see, the weekly candle has clearly broken over the doji, even though by a little bit. The high of doji was 411.92, and as you can see, the spot price is 412.46, confirming that the weekly candle has broken over the doji candle from last week, which obviously has very bullish implications. However, one thing to keep in mind is that if the market continues to go upwards and the Bollinger Band does not expand accordingly, it is very, very likely that the price reverses back to the mean, which is something I'll discuss when we get to the daily charts. However, we can see something interesting from the weekly charts. We can gain a long-term support, at least, because the resistance has now been broken. We can take the short-term support to be the high of the doji candle at 411.92, and we can take a long-term support as the low of the doji candle, which is at 405.68, if the market chooses to reverse that way. And if we move into the daily charts, now we can get our actual no trade zone. So, as you can see, the price action was clearly upwards, and it did end up breaking the doji's high, but it reversed back down to form this high wave candle, which is a clear symbol of market uncertainty. And in order to trade this candle, the high or the low needs to be broken, similarly to the doji. Now, what differentiates this from the doji is the size of the upper and lower shadows, which you can see are disproportionately large, which means that it is even more important to wait for the break of the high and low to act as a support and resistance, because it is very likely that the market turns from this point and can signal a very, very clear reversal. Because you can see, we have been in a clear upward channel for a long while now, and this could end up being a shortfall in the direction of a downwards breakout. Now, however, it is also possible that the market breaks upwards and continues to rally upwards and continue the channel. But one thing to keep in mind is this is very, very close to the high of the Bollinger Band. As you can see, if the market does end up breaking the high of the high wave candle, but it also breaks the high of the Bollinger Band, which, if it does not expand accordingly, could mean that it reverses to the mean and causes a very, very sharp downward rally. We can see this happen in multiple instances. As you can see, the market has gone up, broken, or gotten even close to the Bollinger Band and reversed straight down to the mean, and it's even gone lower. So this is something to keep in mind as well, which I'll be going over in my prediction. Now, it is very, very likely, based on weekly action, that the market does continue upwards. In that case, the Bollinger Band also needs to expand accordingly, because if this does not happen, it is very, very likely the market reverses back to the mean. Now, in the event that the market does break upwards, then we have a clear thing to look out for, the Bollinger Band. But if the price action does not, and the Bollinger Band does not expand, it would most likely result in a mean reversion. However, if the market does end up breaking downwards, then we have a clear target, specifically the moving average, which we can take as the mean. And now that we've covered the weekly analysis on the charts, let's move to the Excel. As you can see from last week, on the 14th of April 2023, a buy trade was triggered as the doji high was broken. However, we entered with an entry price of 412.81 for 242 shares, and a total of $99,900 were spent on these shares. We exited on 412.46, which resulted in a net P&L of minus 84.68, and our weekly closing balance was 99,915.32. As for this week, we have no trade yet. We wait for the trading range breakout. Buy when it crosses the high wave candle high at 415.09. Sell when it falls below the high wave low, 410.06, with a target of 1%. Now this is where we need to be a little bit careful, because last week we fell into this trap where on the last day it broke and it did not reach a full 1%. However, the market did go up 0.55%, actually. So it is very important what day this breakout happens. Specifically, if this breakout happened one day before the weekend, then this target is 0.5%. However, if it happens 2 days or earlier before the week ends, then the target of 1% remains. We have a trailing stop loss, and if the target or stop loss is not hit, then we exit at the close of the closing price on Friday. The max OI for the monthly expiry is for 410 CE, with an OI of 63,720, 385 PE, for an OI of 181,849, and the monthly PCR is 3.15. The max open interest for the weekly expiry is 420 for the CE, with an open interest of 2,748, and 411 for PE, with an open interest of 4,286. And the PE was up from last week. As you can see, the current PE level is 411, and last week it was 390, which is a very, very bullish indicator from the option chain. Further confirming that if the market does go upwards, you need to be a little bit wary, because if the market does hit the Bollinger Band, that is a good time to also figure out when you want to exit, because for a possible mean reversion. And the weekly PCR is 1.25. On the weekly chart, we have a doji candle. If we go here, we can clearly see that there is a doji candle, which has not really been engulfed, because the low is not lower than the doji candle, but it is a big body candle. So really the weekly chart shows a doji candle and a long body candle, and the daily chart shows a high wave candle pattern. We have to wait for the break of the high low of the doji and the high wave candle. And the price action is the upward channel, which is shown in the video, and the weekly trend is up with a possible reversal because of the high wave candle we find in the daily chart. And we have a sideways monthly trend, which I covered at the start. So on this note, I would like to end the video, and as you can see in the next video that I make for the SPY prediction, I will go over this week's prediction and any profit or loss that resulted, and explain why it happened. As you can see, we have changed our target a little bit based off of the learning from last week. And I'll see you in the next video then.